All right, howdy, howdy. I've done some trainings on this before, but I wanted to make this available to everyone, kind of give you a bigger insight of what's actually going on in the annuity marketplace right now. We are seeing constant rate increases, caps and pars getting stronger. We have seen renewal letters from carriers maintaining rates. In fact, some of them are actually increasing rates. And a lot of you have been asking, well, why is this? How is that even possible? Well, let me share why. We have a very unique economic situation right now. Interest rates relative to the last 20 years are high. Now, in the big picture of things, interest rates are still really low. However, the insurance companies in the last few years have been able to buy assets and get a higher rate of return on them, and that is leading to better products for our clients. And if you're a consumer watching this, and if you're thinking about annuities as a part of your overall portfolio, now would be a great time for it. Let me kind of give you a walkthrough. If you look here, the 5-year breakdown of the 10-year Treasury, and by the way, this is not the only thing they look at. I'm just giving you a general perspective here. The 5-year Treasury, as we can see, it has been maintaining itself pretty solid. In fact, there's some upticks here. Now, prior to that, if we look at the all section, we're not going to go back to 1982. I mean, I wasn't even born yet. Let's just look back over here to, like, say, during time frame. You could see that it was down, the date there, 3/20/20. That's when interest rates came all the way down during that time frame. And then they started to come back up, and when they started coming back up to help balance out inflationary pressures, this is where we started seeing much higher rates on all of the annuity products like 2021, 2, 3, 4, and so forth. And it's been maintaining itself now. So in the big picture, it's like, hey, look, if rates keep maintaining the way that they're at, this is going to be a golden opportunity to help people with really great plans. Now, the opposite can happen if rates immediately drop. The main goal of the current administration and the current head of the Federal Reserve is to lower rates. However, there's economic pressures allowing them not to do that. Okay, they're not being able to drop the rates as much as they would like to. But that's going to change in the future. And so rates most likely won't go up. They'll probably come down, but who knows? Maybe they do go up. There's no way to tell. But if rates come all the way down, that means the yield of the annuity products, the lifetime income, the potential growth, those also decrease over time too when rates are lower because the insurance companies are not getting the yield from the fixed assets that they're forced to buy to prove the solvency. But let me show you a little bit more on how this has actually helped our industry out dramatically. This is from LIMRA. In 2025, there's $464 billion in annuity sales. That is massive. Look at the growth rate year over year. Check this out. 2025 RILA sales were up 22.1 billion. Now, RILAs are a securities-based product, but just overall, the word annuity, a lot of people have a negative connotation about it, or a lot of advisors or agents are worried to bring it up. It's one of the fastest growing financial sections for consumer retirement in the entire country. Here's a nice little summary highlight sheet here. Sales rose 7%. That's big, okay? FIA sales rose, RILA sales rose. Everything is positive in regards to annuities right now. Even a lot of the anti-marketing on annuities is not really as prevalent as it once was because people are starting to understand, especially with the advent of Google searching and ChatGPT and all these other AI sources that, hey, yeah, there are probably some bad annuities out there, and yeah, they probably weren't as favorable in the past, but in today's marketplace, they are becoming very viable. I mean, where else can you possibly park money, have a potential to earn, say, 6 to 8% a year, not have any management fees, not have any downside volatility risk? You can't. I mean, the insurance industry is like the middle ground. It's going to yield generally higher than any bank or CD. It's going to not be as high as a pure market-based plan because there's risk involved. It's the middle of the road. Now, annuities aren't there to fix every single problem. They're not there to fix they're not perfect, okay? They're not going to fix everything. But as an overall strategy, it can make a lot of sense for people, depending on their financial situation, to have a small portion within the annuity world. And we're seeing the numbers here. This is not just me sharing this information as somebody who sells annuities and helps people with annuities. This is just the industry data. And if you're an agent, you should be researching this. If you're a consumer, you should really look into it, do your own research. Don't just take one person's word for it or one advertisement. Do your own research, and you can find out that, hey, look, maybe having a little bit more annuity within my portfolio could make a lot of sense. And if you're an agent out there and you're trying to get into this annuity space, now is the perfect time. When I first started, interest rates were terrible. When I first started getting going, it was like 2020, where interest rates were nearly zero. That was a very hard time to be in the annuity marketplace. I mean, cap rates were like 2 and 3, maybe 4% on the S&P. A MYGA, multi-year guarantee annuity, was yielding 2-3%. It was very challenging to say, hey, look, this is a great plan, look at how much interest you're going to earn. Now, given the tailwind that we did have was with the banks and CD rates were typically also near zero, so they were still better than what the banks and the CDs were offering, but it was nowhere near compared to the phenomenal growth of the market. So right now, there's a lot of annuities out there that have guaranteed caps, guaranteed pars, and they're in the double digits. I mean, clients have an opportunity to receive double-digit returns based on major indexes guaranteed for a period of time, say 5, 7, or 10 years, where in the past, we haven't seen this. I mean, this is the golden age right now, in my opinion, for the annuity marketplace. So subscribe for more. Thanks so much.